real-world tokenized assets have climbed to $65 billion, a 44% increase since January 2026. Traditional finance is accelerating its push onto blockchain platforms, tokenizing money, bonds, and cash. This shift is reshaping how institutional investors interact with digital infrastructure. In January, on-chain RWAs surged 232% through 2025, but the 2026 pace has slowed compared to that explosive growth. Despite this, the market has expanded from roughly $100 million in 2021 to over $60 billion today, with tokenized U.S. Treasuries alone reaching $14 billion. As of May 2026, this movement is being driven by major financial institutions and blockchain platforms working in tandem. Ethereum currently accounts for about one-third of tokenized assets, with BlackRock's BUIDL fund surpassing $2 billion and diversifying across multiple chains. Provenance Blockchain holds about 27% of the market, largely due to mortgage-related issuance from figure lending. Meanwhile, BNB Chain, XRP Ledger, and Solana each hold around 6% of the tokenized asset market. On Solana, the RWA market grew by 43% in the first quarter. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Of 2026, reaching $2.01 billion, with on-chain economic activity reaching $342.2 million. Franklin Templeton has also expanded its FOBXX government money market fund onto the Stellar and Polygon blockchains. Ondo Finance dominates the tokenized equity market with $557 million across 230 assets in 8 categories. The largest players are now pushing further into tokenization. BlackRock recently filed 2 new tokenized fund applications with the SEC, including a stablecoin reserve vehicle for on-chain share issuance via Securitize. JPMorgan launched its first tokenized money market fund on Ethereum in December 2025 and filed a second in May 2026. These developments show how traditional financial institutions are increasingly adopting blockchain infrastructure to tokenize real-world assets. The movement is not limited to a single blockchain or asset class. Instead, it's a broad-based expansion across multiple networks and financial instruments. The market is still evolving, and while growth has slowed compared to 2025's 232% surge, the cumulative value remains significant. The next signal to watch is whether BlackRock's new tokenized fund applications gain regulatory approval and begin trading. If they do, it could signal a broader institutional acceptance of tokenized assets as a legitimate asset class. Another key indicator is the performance of tokenized treasuries and how they behave in a rising interest rate environment. If these assets maintain their value and liquidity, it could encourage more traditional players to follow suit. The Solana RWA market is also worth watching, as it continues to show strong growth and on-chain activity. If other blockchains begin to catch, most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Up or overtake Ethereum in tokenized asset volume, it could shift the balance of power in the RWA ecosystem. Meanwhile, Ondo Finance's continued expansion into new asset categories could provide insight into which types of real-world assets are most attractive for tokenization. The next few months will be crucial in determining whether this trend continues to gain momentum or if it plateaus. For now, the market remains in a state of active development, with new players and new assets entering the tokenized space regularly.